What's up, guys? Welcome back to DCA. So today what we're going to do is look at identifying momentum shifts in the market and how you can use this metric that we're going to look at to determine if a large price move to the upside is sustainable or if it's very likely to come crashing down. So yet again, we're going to be looking at the price volume metric. I know this isn't a popular metric. I can tell that when I post these videos, not many people watch them, and that's fine. At the end of the day, I'm obviously not making popular videos. I'm attempting to make videos that are important. So in my opinion, this is a very important metric. It's why I keep showing it. And I think there is so much information that can be derived from this metric. What we're talking about here is identifying the momentum shifts. So we're just going to walk through the price history of Solana as a great example of how this works. We'll start by looking, right at the end of 2020. All right. So the price volume is trailing off. Okay. It's trailing off from the end of 2020 all the way through about the beginning of 2021. And right around here, we see the price volume go on a massive spike. Now, when you see these straight up, basically vertical moves with the price volume, that's typically a good short-term sign. So we see this large move to the upside, and then importantly, you see it continue to trend upwards. So it basically trends upwards, making higher highs and higher lows throughout the entire beginning of 2020, all the way through here to May. All right, and then, obviously during that time, we saw a massive price rally with Solana. We saw it go up nearly 5,000%. What I want to show you, though, is perhaps more important. Now, we know that in May, everything basically crashed, although Solana performed fairly well compared to a lot of other things. But and I think this is important to look at, even though it's almost obvious. So in May, the price volume, so the number of dollars being traded on the asset per day, was dropping. Okay, and that's why you were seeing the price fall. Because in cryptocurrency, there is always going to be a lot of sell pressure because people are making massive profits. If you're up 5,000% in just a few months, are you not going to sell? Are you going to hold it until later? Well, no, you're probably going to sell at least some of your asset. And you have to think from the perspective of the individuals who are holding thousands or hundreds of thousands, or in some cases, millions of shares of these assets. They have massive incentive to sell. So think of these massive price movements as something like a leak. And the retail market is the towel. Well, the retail market can absorb the leak, drying the water up off the ground until the towel just completely soaking wet. And that would be when the price volume loses steam and starts to fall down. When that happens, you can't soak up the sell pressure anymore. The people who just made 5,000% in a matter of 5 or 6 months, they're continuing to sell because they just became rich regardless of where the price is, whether it's up here at 49 or whether it's down here at 20. So you have to think about it like that. A lot of these blockchains fund their programs, they fund their research, they fund their development by selling their tokens. Okay, almost all of them do, especially a lot of the more renowned blockchains that we talk about right now. Many of these foundations are selling the asset constantly in order to pay for various projects, in order to pay for their growth. So when you see the price volume falling like this, you're losing that ability to suck up the sell pressure, and what happens is the price falls. It's as simple as that. So this is I think the most important thing that we can talk about today is right here. So we went on this move then after May. We went from down here at around $20 all the way up to here at around $100, almost $200 in September. So the price volume went on this huge run, right? So we went from here all the way up to here. So 741%, and then the asset itself went up almost the same amount. Now this is critical. When we had this correction here, the price volume started falling. So we went from around 200 all the way down to here at around 125. And then what happened was we went from $125 up to $260. And you could have, it was obvious from a mile away that this run was going to fail. And if you were watching this metric, you would have at minimum gotten out, along the way up to 260, because it was simply a 100% unsustainable rally. We saw a minimal increase in the price volume as we went from $120 up to $260. In fact, we made a lower high. How can you possibly support a $260 price level when you have less interest in the asset than you had just when we were down here at $190? You can't. Simply put, you cannot. And you had time to react to this, because you could see right in this area you weren't getting a large increase in the price volume. The dollars being traded on the asset, you were getting a sideways movement at best, if not down. You had weeks to react to this because you just weren't getting the type of reaction in the price volume that you would normally see in a healthy rally. And that's the key part, a healthy rally. So you had this rally supported by not very many individuals. And what happened? The price volume has since plummeted, absolutely plummeted down. So, we're down here at around $95 now. And what's happening? The price volume continues to move down. So the bottom line is, this can sort of reverse course at any time. But I expect the price to continue to fall so long as you continue to see this head down. Now, what you have to take into account is that big players will likely step in and make purchases. They'll look at key price levels, and that may be, in this $80 range. That may be in this $50 up to $60 range. If you follow this channel, you know that I'm invested in Solana. So it's not fun for me to sit here and say, oh yeah, well, we may go down another, almost 50% from here, but it's entirely plausible at minimum. So you have to consider that as long as the momentum in the price volume is continuing to trend down, you're going to continue to see the price itself fall. I can already see people saying that, oh, well, it's the price is falling. Of course, the price volume is falling. Well, that's not true, because as the price falls, the asset becomes cheaper and you can simply buy more of the asset with the same amount of dollars. So, if an asset costs $100 and you have $100 to invest, the price volume is 100. If the asset is $1 and you have $100 to invest, the price volume is 100. So it simply is an estimation of how many dollars are being traded on the asset per day. So it's in my opinion, one of the best ways to look at the overall interest in the asset across a multitude of prices, basically. So, we can easily compare with this a $260 Solana with a 61-cent Solana that we had back in May of 2020. This shows you how you can use this metric on any asset. It doesn't matter what the asset is. And if you see something like this, where the price volume is steadily falling in spite of the price rising, that should be sending off alarm bells in your head, just warning signals all over the place that something's going on here. This is a contrived rally that you're seeing. It's probably being propped up by a small number of whales who are then going to dump the asset on top of your head as you're trying to FOMO in at these $200 plus levels. All right, guys, that's going to be it for this one. If you guys like this type of content, hit like and subscribe. You could head over to the Discord channel to sign up for the DCA Index Risk Model. It's a risk model we have for Bitcoin, Ethereum, and most of the top altcoins. It will help you identify market cycle peaks and bottoms. Head over there, sign up for it. I'll send it out to you in a few days. So that's it for this one, guys. Until next time, as usual. See you.